Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guests on the show. Joining us today are Ritesh Ashar of KIFS Trade Capital and Samir Kalra of Target Investing. Many thanks to my guests for joining me today. On the show, we discuss State Bank of India, which is gearing for the close to 9,000 crore IPO of its cards division. We ask what does this mean for SBI. We also discuss Kotak Bank and what's causing the recent outperformance. Remember, the counter has moved up almost 15% from the recent lows. DLF is trading at a 52-week high. We ask our analyst whether the rally will continue in the stock. And lastly, we ask our analyst one stock that they are recommending to their clients to buy in these when the Nifty is actually trading at record high. So these are the stocks that we'll discuss in today's edition of Hot Money. Let's start with the first one, SBI. And SBI did manage to rally slowly and steadily. Yesterday, all the news came out that potentially over the next few days, the IPO will come out soon of its subsidiary SBI Cards. The market buzz is that the valuation probably is higher than what the SOTP valuation that most of them have done on the analyst side. 8,000 to 9,000 crore IPO that could come in which 500 crore will be the fresh issue, while the others will be an OFS. But a lot of excitement, Ritesh, on SBI with respect to SBI Cards. How are you valuing SBI Cards? Once this IPO comes in, how will that benefit SBI?
See, definitely it will be benefited more to the SBI because now the banking structure itself is diversified in terms of cross-selling products. So SBI Card is one of the subsidiary, same ways when we look at the wealth products like mutual fund, insurance, CASA. So banking structure, it have been diversified in terms of now the wealth creation business as well. So definitely SBI Card has an IPO, it will add lot of value in terms of expansion. If we look at overall banking system has been moving towards the digitalization, and that is what the future what we can see in New India. So looking at the product demand right now, penetration is quite low. So if you look at the overall penetration against the population and overall the card holder, existing card holder, it is hardly 1.75%. If we look at the mature market like Singapore and Hong Kong, where the cashless economy is quite high, comparatively India is way behind. So looking at the market potential, definitely it is going to be an add value.
Okay, and do you think that there could be more potential once the IPO size is announced, one also detail account? Should investors buy SBI to play for SBI Cards? Do you think that the rally will come into SBI stock?
Yeah, of course. When SBI is decided to sell 4% of his stake to the SBI Card, which is roughly at around 8,000 crore to 9,000 crore. So that money is definitely helping furthermore to expansion of the vertical as well. So definitely anyone who would like to, go for a growth territory of the company, the SBI is going to be a strong pick on this.
Okay, that's the view that's coming in. Samir, what's your sense? What do you make of this IPO that's coming out, and what's the potential impact on State Bank?
So I think if you see the profitability, if you see the valuations, whatever the data is available in the public, I think that's 30 times, 32 times the earnings. And I think for a card only company to be into credit cards and listed, that PE can generally go to 45-50 because of the oversubscription and all these phantoms. So you can judge a 70 to 80,000 crore kind of a valuation over there post listing.
Okay.
And if you give a, let's say, a 40 to 45% discount, that comes to around 35,000. So I think right now there's another 15-20 rupees easily to be made in SBI as a parent company to play out the whole process of IPO listing. Post the listing, I'll prefer to bet on SBI Cards directly rather than going through SBI. But till the process and the whole process gets initiated and completed, I think SBI has a 20-25 rupees space left.
So 8 to 9,000 crore is the IPO size according to what sources have indicated, and that's probably a little higher than what the street is anticipating. You think that they will be able to garner such a demand on this size, or they will be able to, will the IPO generate such interest?
So if you see on the historical, let's say past 12 to 15 months of IPO market, anything which is a standalone monopoly kind of a place or a very high market share gain kind of an entity and a very individual segment to be listed has gained that kind of interest. Given the card company is owned by SBI, it'll show a lot of institutional investors. So that's why they can even pull off that 8,000 to 9,000 kind of amount, which I think is around, let's say, $1.5 billion in a certain way. So I think over that there might be even oversubscription, because SBI Cards is the second largest in terms of active users using it out, and per card details are higher as compared to HDFC credit card. So I think over there is a kind of a premium to be garnered over there, but that's where I'm saying that it's better to play through parent till the time it's listed.
Okay.
Post listing, it's better.
Okay, that's the view that's coming on SBI. Just follow up on today the Nifty Bank along with the Nifty hit a record high. Are you recommending any of the banking stocks to your clients at this point of time, or do you believe that the valuations are now very high for some of these stocks?
So I think in the PSU bank, especially, I think Canara Bank is one bank where I feel fundamentally the valuations are still cheaper. The management change is not factored in. The results are still showing some kind of provisions. On the private end, I think IDFC First Bank and Axis Bank are the two choices, because I see a lot of growth potential coming in through over there through their subsidiaries, and certain on the IDFC. I see the fundamental bottom getting formed.
Okay, and Ritesh, anything on the banking side that you've recently told your clients?
He's rightly said IDFC First Bank is going to be my choice for the day, and Axis Bank, yes, the fundamental is quite stronger.
Okay. So I believe that's your stock of the day, so we'll talk about that, but IDFC First is something that you like. So we'll talk when we come to that question. So SBI as a stock is something that they believe the cards division probably will aid the bank going ahead. Let's start with the second stock, and that again it's on the banking side. I think it's a banking heavy day today. Kotak Bank, and Kotak Bank today is trading rather flat, but it's managed to rally almost 15% from the recent lows. There's no news as such, but nevertheless there is traction. Yesterday also was looking rather strong. Samir, do you like Kotak Bank?
I do like Kotak Bank, but for me that promoter dilution head over is still very high. The valuations are not that cheap. It doesn't factor in the risk of the promoter dilution from my point of view. And given the stable numbers which came in, that premium valuation is valid, but I don't think so that premium valuation is sustainable at this point, till the time promoter dilution and all those kind of risks get out of the system. So I'm neutral to it. I'm not too positive as of now, given the risk involved.
But what's the update there? What kind of risk will this promoter dilution have? Because they did something and then the RBI came back saying that this is not allowed. But what, according to your analysis, will Kotak have to dilute? Is there no other way out for them? How are you playing this scenario? And if this RBI forces them to dilute, what impact do you see on the stock?
So I see that the RBI will enforce the promoter to dilute it in some way or the other, and they'll not accept what has been done, because earlier they would have accepted in the first stage itself, but due to technical reasons and then it going to the High Court and then it coming back. So I think that status quo is affecting me as an investor, and for me that becomes more of a downside risk rather than an upside risk. So I rather give it a 15 to 20% kind of a discount from here at least. And then see that risk minimizing to certain levels, and then it becomes better. But for me, still Axis becomes much more potential driven rather than Kotak right now.
Okay, despite the valuation pickup that has happened. Axis. Okay, what's your sense on Kotak? Is that something that you like?
See, if you overall study the performance of the banking sector, there are four major parameters. One is interest income, second one is CASA ratio, third one is advances, and fourth one is NPA. If you look at overall performance, it is fantastic. If you look at interest income, it is hardly around, it is growing by 24%. If you look at CASA ratio, it is also around 28-29%. If you look at advances, is also managed well. NPA is also managed well. So I personally feel overall Kotak Bank per se, it has performed well as a structure point of view. Yes, there is a promoter dilution issues are going on, but in terms of current market price, if you look at it, I think buy on dip is quite advisable. The reason is, if you look at price to book value compare within the peer groups, it is quite high. It is running at around 7+, so which is considered to be an expensive or rather high value stock. So I personally feel 1450 and 1500 is going to be a good pick for the long-term perspective.
Okay, and what's your sense on this issue of dilution? Is that a big overhang according to you?
I think it is overhang. So I don't think so it is going to be a big junk, but yes, there are a lot of reforms are going on, so that needs to be balanced out. But structure point of view or management point of view, there will not be a big issue going forward. In terms of pricing, yes, it is an expensive, so I think wait and watch will be an advice.
Okay, that's the view that's coming in on the second stock, and that is Kotak Mahindra Bank. We move on to the third stock, and that is DLF. Yesterday it hit its fresh 52-week high. I don't know what the stock is doing today. Let's pull it up and see what it's doing. It's down 1.5% after a massive rally. But a lot of brokerages have now started pitching DLF. Yesterday UBS came out with a rather bullish note. Morgan Stanley upgraded the counter yesterday. So there is traction. It's managed to move significantly from the lows. Is DLF... will the rally continue, and if you like the real estate space, is DLF the stock that you would buy? What's your sense on DLF as such?
To be very honest, overall sector does not look like to be very attractive in terms of investment point of view. When it comes to DLF, right now it is an impulsive momentum what we have seen due to the restructuring is happening at the management level of changing the business structure from direct sale to the rental income, and they are expecting they will have a huge amount of rental income because they have empty inventory in place. But I don't find the rental income is also going to be a very attractive, because majority investment or the rather project, it is more into the northern part of India. So overall real estate is quite on a downtrend or rather choppy, so I don't feel it is an extraordinarily boost in the real estate sector.
Do you feel so you are having concerns on the entire sector? There's no real estate stock that you've told your clients to accumulate because you feel there could be more trouble for these companies?
Yes, definitely there are a lot of RERA issues. Funding is also a big pain, and when it comes to an interest taking an interest from the banking, I think it is very much expensive. No doubt recently the FM has given a lot of liberalize in terms of policies and a lot of benefit to the builder lobby, but I feel it will take another 2 quarters to come into the stabilized phase. So at this point in time, particularly DLF, when the investment is more into the northern side of India, I don't think so it is going to be in advice for a long-term point of view.
Okay, so avoid DLF at this point of time. Is that a similar view that you share, or are you bullish on the counter?
So I'm particularly bullish on certain companies in real estate, Oberoi Realty, Phoenix Mills and DLF. DLF, given the rally, I wouldn't participate at these kind of prices, let it cool off. And I think 175, 180 is the price where, another 10%. So you can do a SIP, that's better for a retail investor. See, what has happened in past couple of years in DLF, there have been 2 separate systems. Residential has rationalized and they're only releasing the completed projects and the units. So they are easy to sell off. On the commercial end, they are investing heavily because they have GIC now supporting the fund flow. So I think the balance sheet, even if they do higher capex from now onwards, will be much more less leverage than what it was previously on the same rupee. So I think it's better to invest in DLF right now, and I feel somewhere the real estate market is kind of a bottoming out, especially on the higher end and on the commercial ends.
Okay, and what about the other 2, Phoenix Mills and Oberoi? What do you like in them?
So if you talk about Phoenix is the only company in listed space again where malls have been branded. Let's take in that sense, the rental yields are more on the premium end. The brands are ready to pay per square feet premium higher than comparatively. The balance sheet is supported by 2 pension funds invested in it, so the leverage is very low. The capex is coming in next 2 to 3 quarters in a higher definition that will increase 30 to 40% square feet. So that gives a pretty good edge to the valuations from here as well. So that's why I like. And Oberoi, I'm more bullish on Bombay real estate market, and consolidation in some way or the other is helping the prices to come up or stabilize a bit. And I feel Oberoi, given the balance sheet and the cash flows, I think it's a better way to play it out.
Okay, Oberoi as well as Phoenix Mills and DLF are the stocks that Samir does believe could offer potential for the upside. And finally, the last stock is one stock we're asking our friends which is one stock that they've recently recommended to their clients. and the reason for this recommendation. Sameer, which is the stock that you've recently recommended to your clients and why?
So we've started picking up small stake in Aegis Logistics.
Okay.
So this is mainly a company who does transport of LPG. And LPG, if you see in India, has grown substantially in terms of consumption. And imports have become around 55% of consumption. Now, they have capacities in west, east region, and they are doing a capex over next 12 months, which will increase their capacity by 50 to 60%. And there are a couple of projects which are done by HPCL and one of their own railway projects, which increases their capacity utilization at the present projects. So I think these kind of triggers and the volume growth pick up even if you see the con call with the management. So there's a good potential and less leverage. So they do very minimum capex, but the yield of that capex is very high, and they have almost net negative working capital cycle. So I think these all things and the valuations right now it runs at around 13 to 14 times. I think that way it gives a big edge to our.
How have the financials been performing over the past few quarters?
So they've been showing around a 30-35% growth on the revenue and around 20 to 25% growth on the EBIT. And if you see profitability, there is an impact of taxation somewhere, but if you see the PBT, that's growing by 15 to 16%. They have ROEs around 18 to 20%, but the asset turn is right now around 4 times. It has gone to 12 times at a peak. So there's a big, huge gap in the system. So I think LPG and the gas connections can really work.
And what's the key risk if someone is looking to invest here? What would be the key risk?
So the key risk eventually comes to the capacity constraints. If there is not a continuous capacity expansion, the delta can come off, and that can hurt the eventual investors in the company. So until the time the capacity expansions are on the minimum and they are doing on a continuous way, I think the cash flows are maintained really well.
Okay, that's the view. Aegis Logistics, and Ritesh, I believe it was IDFC First Bank that you spoke about. Yeah. So why do you like this bank?
So if you look at overall after merger entity, if you look at overall CASA ratio have been increased from 8% to 18%, which is a fantastic for any mid-size banking channel. And if you look at the management commentary as well, the management is very clear to disburse the consumer segment, retail consumer segment of India. It is going to be in very demanding phase. And that's how the IDFC First Bank is coming out with the smaller branches all across and trying to, capture the market share. And at the same time, they are focusing into disbursement on the loan side, wherein the consumer loan in terms of low ticket size is give a better growth territory. If you look at the Mudra scheme as well, 6 lakh crore disbursement has happened, which clearly indicate the credit demand in India is going to be and continue. So credit market growth in India is going to be an upcoming and it is in the need. So I personally feel IDFC Bank, looking at the expansion plan and having a retail centric model, it is going to be a robust in terms of performance wise. If we look at, as I said last time also, when we look at the net interest income, when we compare with an CASA growth, when we look at the advances and net NPA, it will be very difficult to compare with the last year performance due to merger entity. But overall, if you look at the quarter result and the performance quarter on quarter, it looks to be quite impressive and promising at the current price. So I personally feel, looking at the long-term perspective, investors should invest into such kind of private banks.
What's the key risk for IDFC First?
See, if you look at key risk, nothing has much, because current liquidity ratio is running at around 125%. As per regular, it should be 100%. So I think they are managing their liquidity ratio as well. So risk factor, I don't find something extraordinarily on these things, because whatever the risk factor have been happened, they have already corrected in last 12 months. So here onwards, I don't think so. Okay, there will be a risk factor involved in this.
And what about the asset quality? Because of post the merger, because IDFC got in a lot of weak asset quality. How do you see asset quality?
The impact of asset quality and the deferred tax has already happened 2 quarters ago.
Okay.
So that impact in the stock and overall balance sheet is already done.
Okay.
So now if you look at overall quarter on quarter performance after all the entries have been done, I think it is quite stable and it is at par with the market demand. So I feel asset quality is also into the improving stage. So nothing to be worried about.
Okay, so that's the stocks that are being spoken about. Aegis Logistics and IDFC First Bank are the 2 stocks that you should watch out. at least for a positional basis on the reasoning given by our guest. But with that, it's a wrap on today's edition of Hot Money. Let me thank my guests who've come in today, Ritesh as well as Samir. Thank you so much for coming in today. Ask BQ comes up next. Stay tuned to BloombergQuint.